Good evening, investors. It is Wednesday, September 17th. I'm switching things up. I'm going to try an EOD end of day video here. I know most of you don't watch the videos till later in the afternoon, and everybody keeps saying, or not everybody, but a good group of you, can you do an afternoon, after the market close update? So instead of giving you kind of early morning pre-market video analysis on preparing for the day, I'm kind of going to summarize and go over the opportunities that have unfolded and what to expect tomorrow in the market. So looking at the markets, we had the Fed cut quarter basis point today, create a little bit of volatility intraday. If we look at the 10-minute chart down here at the bottom, you can see here a little bit of volatility. Now in the grand scheme of things, the market kind of swang about 1% or so, kind of up and down. Really not a whole lot. You can see the previous session we just traded sideways, the market kind of waiting to see what's happening. And then today was just kind of an earthquake, a Richter scale kind of movement. The news hits, shakes things up and more or less neutralized. So nothing too severe really took place. The Fed's talking about there's no big push for a larger rate cut or anything like that, which is kind of what I expected. I don't see a lot of pain on Wall Street. All-time highs is not very painful, and that's kind of what I think the big markets are always trying to protect, is keep equities going up. So if we do look at the short-term price action, the 30-minute chart, we had an oversold market condition a couple weeks ago. The market has ripped to the upside. You can see this short-term oversold condition over here, and today's volatility with the news. Now, overall, we do have some more volatility coming on Friday. It is triple witching day. So for options, meaning we could see price really swing around or get pulled or pushed in one direction for the close. So a lot of options, the majority of options expire worthless. Triple witching means the option players can make a ton of money if they can make the options close outside of wherever most of the options are set. So that could be pretty interesting. When we look at the volatility today in terms of the VIX, the VIX moved down about 4%. Again, the VIX in the grand scheme of things has just been going down. There's not a whole lot of real fear in this market, and that's kind of why it's been drifting higher. If we look at the put-call ratio, it's up 12% today, but nothing significant for the put-call ratio. In fact, it's still very low. I talked about this with members the other day, yesterday, I think, in more detail, talking about how it usually means the market is ready for a pullback, a tiny one. And this is just telling us people have already bought their positions and now they're buying call options to add more leverage with their leftover change in their account. And this usually means the market's getting tired. So if we were to look kind of at the sentiment charts, let's take a look at our sentiment charts. Now, this is a custom tool I use. This tells us when the market is going from an uptrend and starting to get bearish, it's starting to show weakness. And then, of course, it goes red when the trend and the money flows and the sentiment is down. Well, we've been trending up really nicely, but now we've gotten into this really funky market condition, similar to over here, that this market could be very close to going off a cliff. And the big question is it a 5% correction? Is it a 25% correction? We don't know. So we just have to manage positions. And we did. This is the same for the NASDAQ pretty much. If we flip to the NASDAQ, both charts you can see, they both look pretty much the same in terms of sentiment on the hard right edge. We did lock in partial profits with both our SPY and our QQQ trade yesterday at the opening bell. So we got a nice fill, reducing our exposure and risk, locking in some gains, moving our stops up, and kind of just managing those positions. Another play that we're in terms of that space here is XLC. This is the communication sector. It's up really nicely from our entry price about a month and a half ago, up about 10%. We have locked in partial profits on that as well and moved our stop up. Now let's take a look at gold. Gold's been moving. It's been forming some pretty nice price action. In fact, if we just focus on the daily chart, gold has been breaking out of this huge bull flag pattern. We did take a side trade on this, an extra trade. We've hit our first target with it, and it's continuing to run higher. This is showing gold should run to about 4,100, maybe even 4,500, depending on how that goes. But either way, we got to be aware, got to lock in profits and move our stops up. No matter how much we love an asset class or how big the upside target is, we still need to manage risk. This is a trade. This is not something we're falling in love with and holding for the rest of our life. We're just playing this big breakout here for an imminent move. We are playing for one of these moves. You got a consolidation, and then boom, you catch these kind of two waves of a move. We've got this consolidation. We've got the first portion, and then we'll see where that second half of that move goes based on Fibonacci extensions, which I cover here all the time and which are pretty much the most powerful tool to forecast where to put your profit targets and where something could run, and also tell you where it could pull back if it does reverse, where it should find support to potentially add to a position, or to at least know to put your stop below that level, because you don't want to get shaken out too early. Now, we have taken on some more plays in the precious metal space. We did recently have the SILJ trade. We actually closed that out a few days ago at a 20% gain right here. Very nice entry point. It ran up, and it's pretty much trading where we got out. And the volatility is showing signs. Again, this market, all the markets here could roll over at any point. We got to let the market digest the Fed news, triple witching. And typically when we see a lot of these assets hit these Fibonacci targets and these measured moves that we have, a lot of times that's when a market puts in a pretty big correction or reset. So that's kind of where we're at in terms of the precious metal space. Now, I should mention to people, I know a lot of you are some of you are confused of, where are these trades? You're waiting for them in the YouTube videos here. And, the trades that we do, those are for the newsletters. These are all trades that I issue and that I take with my own portfolio. So again, a lot of times I don't always post on YouTube. If we're deep in a whole bunch of trades and we're managing positions, I don't share those publicly. I share the general market updates, keep you posted. I pretty much tell you where I think the markets are going. I tell you what we're positioned long and short, different asset classes. But if you want the detailed trade alerts to know when to get in, when to get out, and all of that stuff for targets and stops, that is separate from YouTube. YouTube is just sharing the market analysis, and the trades, the exact trade alerts aren't in there. Let's cover Bitcoin. I know a bunch of you have mentioned you want a Bitcoin update. It continues to struggle. It's kind of stuck under resistance here. If we look at Bitcoin, it may have a push. It does have a little bull flag here. It might want to push its way higher and get up to these highs once more, but it is trading kind of right at resistance, right underneath this level, trying to figure out what it is going to do. Overall, I'm not a big fan of the Bitcoin chart here. I did like it over here. We played this breakout in November. We played this for a 40% gain, and we got out right on this peak over here. And we did play it again over here. We got in and we locked in gains. We moved on with the IBIT ETF as well about a month ago. But again, Bitcoin, I'm not a big fan of here. We have short-term trades, and it hasn't met any of the criteria for a new trade setup at this point just yet. Now, I do want to touch on the long-term picture here. If we look at TTI, this is the weekly chart of the SPY, and more or less this tells us when we have more or less a bull market, when we have a bear market phase and the trend is down. And of course, we've had another bull market here. We had a little market reset with the tariffs, and we're back into a bullish trade. Again, this is a longer term strategy, just trying to identify bull and bear market cycles. This is a newsletter. I know some of you are saying the newsletter I have is a little high price for potentially your account size. The TTI, the Technical Investor, really shows you when we're in bull and bear markets. It's only $250 a year. You can get access to it and be able to totally benefit from bull and bear markets. So, you can go to the Technical Traders /TTI if you're looking for something to get monthly mentoring sessions, 2 of those, and of course, our updates every week for this as an investor. The flip side is if you want something even more active, instead of just kind of investing signals, the Golden Oil Guy, which I've managed for a long time, is available here. This is momentum trading. This is really trading oil, Bitcoin, uranium stocks, the indices, volatility. It has all of those, and it's kind of momentum trades. Some trades last a day, some might last a couple weeks, but it's like momentum and swing trading. And of course, it's only $59 a month if you want to get more active stuff. I don't fully manage the trades on this one. I have another trader who manages these. He's very, very good at cycle analysis, short-term trades and momentum. He's buying dips and selling rips and playing breakouts. It's a constant update of all those positions every morning before the opening bell. And so you can put on whichever assets you like. They're trading ETFs, and we also provide the future signals for that. So with that said, that is about it for now. We'll let the markets digest. We'll see how the markets move tomorrow. We're seeing futures up a little bit after hours. The stock market is primed and ready for another pretty decent pop. If we were to use Fibonacci extension, we've got the NASDAQ here potentially set to run percentage-wise about 5.6%. If we look at the SPY, our next upside target for the SPY is actually about 10% higher than where it is. Doesn't mean it's going to go there, but that's where our target is. We are in position to ride that. We did play a very nice move right back over here. Once the market changed direction, we caught a nice 15% move in the SPY. We also caught the same 15% move in the QQQ, both of those. And the market has reset. We had a reset, and then we're back long these markets and just letting them kind of unfold and managing our positions along the way. So anyways, hopefully that gives you an update what's going on, and stay tuned for probably a choppy and wild Friday as we go into the weekend with triple witching. Bye-bye.